Welcome to the webinar. With us today, we have Matt Rivers with the South Carolina State Housing Finance and Development Authority. Matt has over 25 years of experience in housing and mortgage banking, including executive positions with Bank Boston, Fleet Bank, and Payne Weber. He's been with the State Housing Authority for over 9 years and has previously held the positions of Director of Homeownership, Director of Planning, and Director of the State Housing Trust Fund. In his current capacity as the Director of South Carolina HELP, Matt is responsible for designing, implementing, and managing more than $295 million in foreclosure mitigation assistance through the U.S. Treasury's Hardest Hit Fund. Thanks for joining us today, Matt. We appreciate it.
You guys having me here and giving us an opportunity to talk about this program. As said, this is the SC HELP program, which is the South Carolina Homeownership and Employment Lending Program. We call it SC HELP. And the idea behind the program is indeed foreclosure mitigation. The program was funded or is funded through the Troubled Asset Relief Program. I know everyone's heard of the TARP program that was used for bank bailouts. As some of those monies flowed back into Treasury, Treasury redeployed those monies to several states. We're one of 10 states that received funding to help mitigate preventable foreclosures. And the key there is indeed the word preventable. We're not able to stop every foreclosure. Some folks just can't be salvaged, but where it's preventable and where it meets the guidelines of the program, we certainly do everything we can to help. Overview of the program. So far, South Carolina has been awarded a little over $295 million. South Carolina made the list of recipient states based on unemployment numbers. The first 5 states that came into the program, their acceptance to the program was based on the fact their foreclosure rates were so high. For South Carolina, it was more a combination of foreclosure rates combined with unemployment rates. They looked at foreclosure rates in 2009 and 2010, and those states that were significantly above 11% received funding. And as we all know, unemployment has eased somewhat in South Carolina, but as of March of this year, we still had 19 counties in the state that had unemployment rates that were at or above 12%. Meaning there's a lot of folks out there who are still looking for work, and a lot of them are homeowners, and therefore need help maintaining their homes. One of the big pieces of this with working with Treasury, although we did get the money awarded in a non-competitive fashion, we did have to go back to Treasury and present a plan. We spent a number of months putting a plan together, working with Treasury to design a program that met the terms of the legislation under ESA and TARP, and then also met the needs of South Carolina. Treasury did a good thing by not dictating a program from Washington that may or may not meet the needs of the states in which they were operating. So we were very pleased to have the opportunity to work with them and put together a program that we feel like will work for South Carolina. Part of that was we had to create a separate entity known as the SC Housing Corp. To receive the money. Ironically, since it was bank bailout money, it couldn't go directly to a governmental agency, so we actually created a separate corporation to manage this fund. However, from a purely practical standpoint, the money is managed by the State Housing Authority. Let's talk a little bit about the program design. As I said earlier, we had, as part of our process with Treasury, we had to build a proposal and offer a program design for their review and approval. One of the big things that came out of that was the idea of responsible borrowers. And to talk a little bit about that, the responsible borrower is that family who's facing the possibility of foreclosure or even just severe delinquency because of circumstances that were beyond their control. It wasn't a matter of, they went out and bought too many new cars, they ran their credit card up, they mismanaged their debt. They were cruising along very nicely, they're making that mortgage payment, and then something catastrophic occurred. Somebody lost a job, there was a major medical issue or a disability. Something occurred in that household to hopefully temporarily put them in a position where they could not afford that home. And that's the households that are targeted under this program. Everything we do is designed to provide short-term assistance. The one thing we get a lot of phone calls on, but the program does not allow us to do is we cannot modify anybody's mortgage. If they've got a mortgage with Bank of America, Chase, whoever it may be, and they need to get the terms of that mortgage modified, they need to work directly with their lender to try and accomplish that. What we can offer instead are short-term solutions, hopefully to get them over that hurdle, that catastrophic event that's occurred, and get them back to the point where they're able to be self-sustaining going forward. And perhaps at that point, they will qualify for a modification with their lender. There's three key components to the program, and there'll be more components coming in the next several months, but I wanted to focus on these three today because these three are active. They're in the market where we're offering these products now. And that is a monthly payment assistance program, a direct loan assistance program, and property disposition assistance. Now, one thing to talk about before we dive into the specifics of these programs, and we will talk about each one of them individually, is the issue of servicer participation. As you folks know, you're all in the real estate business. You understand how the mortgage business works, that a consumer gets a loan, it may be through a mortgage broker, it may be through a mortgage banker. Chances are that loan within a year or so is going to end up elsewhere. Somebody else is going to service that loan. You may have gotten it through a local bank, and 6 months later, one of the bigger players, Bank of America, Chase, whoever it happens to be, is now servicing that loan. In order for us to assist a consumer, their servicer, whoever services their loan, has to agree to participate in the program. They have to sign an agreement with us where they agree to provide us certain information to make sure that we're providing funds appropriately, and they also agree to apply funds correctly when we decide we're able to help a borrower out. You would think intuitively that servicers would be clamoring to participate. To a certain extent, that's true. I'm very pleased to say we've got over 30 servicers participating. That list grows pretty much by the hour. All the major players are on board. We have Bank of America, Chase, Wells Fargo, which includes Wachovia, which obviously was a big lender here, GMAC. All those folks are on board with us and have been for some time now. But there's still other servicers out there who have not elected to participate yet, and we continue to work with them to get them on board. But that is just a key component that I wanted to mention before we get into the program specifics. The first program to talk about is monthly payment assistance. This program does exactly what the name implies. It provides assistance to households to make the monthly payment to keep them in their home. Right now, this program is specifically for folks who are unemployed. In other words, they've lost their job through no fault of their own, and they are or have been receiving unemployment benefits within the last 12 months. When they come to us, the hope is they're not terribly delinquent. They may be several months down, but if we're able to approve them, we actually step in and begin making their mortgage payment for them on their behalf, and that is the full mortgage payment. We don't require that they participate in that. And that assistance is available for a defined period. For most counties, or about half the counties in South Carolina, will go up to 12 months. Other counties with higher unemployment will go up to 24 months of assistance. But of course, if they get a job during the assistance period, they're responsible for taking that payment back over, and we monitor that on a quarterly basis. There's also an absolute financial cap that no household, regardless of what programs they may participate in, can receive more than $36,000 in total financial assistance through the program. It's a great program. I know, a lot of you folks, you're still talking with clients that you may have served in the last few years who, we all have friends and neighbors who have lost their jobs and are facing the possibility of foreclosure because of that. This is a great tool, a great program to refer them into, and hopefully we'll be able to help them out. Next program to talk about is direct loan assistance. This one really is kind of a companion piece to the monthly payment assistance. For monthly payment assistance, we were concentrating on that borrower who is still in the midst of that hardship. They're unemployed and need help to stay in that home. Direct loan assistance is a little bit different. It's looking at borrowers who are on the back end of that hardship. They've become reemployed, or they were temporarily disabled, and went through a period where they were not able to afford that monthly payment. They got behind on their mortgage. They're now in a position to afford that payment going forward, but they have this huge black cloud of that delinquency looming over their head that continues to accumulate fees. They continue to get calls from the collectors at the mortgage company. This program is designed to step in and bring that customer current. We'll go as far out as 6 or more months delinquency to bring that customer current, provided they meet our other criteria. Again, the overriding factor being that it can't be a self-inflicted hardship. If they just mismanage their funds, and we do review every file, and are therefore behind, we can't help them. But if they had that catastrophic event beyond their control, they need to come to us and let us take a look at the transaction and see if we can help. The great thing about this one is, once we bring that customer current, they're 100% current. We require the servicers that, as part of our agreement with them, there are certain fees they have to waive, and those are permanently waived. They can't come back later and hit the borrower with them. And when we write that check or transfer that money via wire transfer, that borrower is 100% current as of that point in time, and now can begin making that normal monthly payment without that delinquency looming out there. For both these programs, the monthly payment assistance and the direct loan assistance, we are required to secure a lien against the property. Doesn't require repayment, there's no interest, there's no payments involved, but to meet the terms of the legislation, we are required to put a security instrument on the property. What we do on every transaction is we put a mortgage out there that's 5-year forgivable, no interest. The only risk that borrower has is, if they sell that property within those 5 years, they may be responsible for repaying a part of that money. Beyond that, if they stay in the house for 5 years, the debt that they would owe us for that assistance goes away. So there's really no downside for the borrower. The next product I want to talk about is property disposition assistance. And I've got this one on the list. It's not actually active yet, but it should be within the next few weeks. We quickly saw that there was a significant population of borrowers out there who, they're in a position that none of the other assistance programs are going to help them stay in the home. The reality is, and it's an unfortunate reality, is that they're going to lose their homes. And in a lot of cases, a short sale and or a deed in lieu of foreclosure is the best vehicle for them to do that, as opposed to dragging it all the way through foreclosure. That gives them a little more control over timing, gives them ability, hopefully, to work with their lender and negotiate terms as far as when they need to move out of the property, the terms of the release. But we also realize that customers going through that often have an opportunity to fall through the cracks, and not in a good way. What we don't want to see is customers coming through a short sale or a deed in lieu and then finding themselves homeless after that fact. So we've designed a program that'll offer some financial help to those borrowers to help them really move out of the existing property into hopefully an affordable rental property. That assistance is payable directly to the borrower. It's payable after the fact, once that short sale, that deed in lieu is closed. That we just provide direct financial assistance to the borrower. They don't have to provide receipts or proof or anything that they're using the money specifically for moving expenses. It's just designed to get them where they need to be as far as a housing situation goes. And again, watch our website, which is scmortgagehelp.com, and as that program becomes available in the next few weeks, you'll see an announcement there. I want to talk a little bit about minimum eligibility criteria. And obviously the purpose of this webinar is not to make you guys underwriters where you can approve deals on our behalf, but instead to give you an idea of kind of what's out there and what levels of assistance and how customers get to it. We actually reference the mortgage, the SC Mortgage Help website. That is our primary intake vehicle for borrowers. If you've got folks in your community, whether they're past clients, folks that you go to church with, neighbors, whatever the case is, if you know they're facing these type hardships, refer them to the website. They can very easily log in, create an account. Everything's very private. It's very secure. They could input their information to tell us about their situation. It gives them help in designing a hardship letter to explain to us what happened. It gives them the ability to fax in documents that can then be scanned into our system so that they don't have to worry about paper copies falling into the wrong hands. So again, the website is the primary intake vehicle. And the other thing that website does for us too is a little bit of pre-screening on the front end as far as eligibility. Some very basic things just to get folks in the front door. One is their original loan amount can't exceed $729,750. That's an edict that came down from Treasury, and honestly, we do think it makes sense. Hardship. As we said before, there has to be a hardship. And we try to work with borrowers and give them the opportunity to describe that hardship to us. And we see a lot of folks with some things we hadn't thought of yet. So again, hardships come in different shapes and sizes, and we encourage folks to apply and, in essence, tell us their story. The only properties we'll do are owner-occupied and that are primary residence. If it's a second home or an investment property that's facing foreclosure, we simply can't help with that. Again, working with Treasury, that was indeed a hard and fast rule. Another one is no felony convictions within the last 10 years for a few specific reasons. And again, that ties back to the TARP legislation and what its limitations are. Once a client jumps over these very basic hurdles, they're able to create a full account on our system. What happens at that point is we know customers need help to get through this process. So we've created a network of housing foreclosure counselors across the state. We currently have 23 organizations that are nonprofit agencies that participate in the program. We have 3 more we're currently negotiating with now, and that list continues to grow. So when that customer creates an account, they're assigned to a counseling agency. That counselor's responsibility, we call it guide and gather. They guide the consumer through the process of getting everything documented, and then they help them to gather the information they need to submit to us to have us review the case. And the counselor really is that customer's advocate through the process. So as they guide them through and they gather the documentation, they'll submit it into our office on the customer's behalf so that we can make a final eligibility determination. The message I give my counselors is the same message I give everybody I talk to about this program is make us say no. I get a lot of customers that say, well, I looked at your information and I just don't think it fits me, so I didn't think you could help, so I didn't apply. My message is go ahead and apply. Tell us your story. We're always looking at each individual case, trying to find a way to approve it, not a way to disapprove it. So again, we encourage folks if they're facing these type situations, apply now, and hopefully we can help them before they get too far behind. From a realtor perspective, obviously there's a couple of moving pieces here. One is your past clients. I was a mortgage banker for years, and obviously have an appreciation for how you guys go about soliciting business and how important that referral network is to you. So most of you are in contact with past clients, and my suspicion is a lot of times you'll find out that past clients are facing a hardship, that they may be in danger of losing that home. This is a great tool to use to refer them into, continue to build that relationship with them. Whether we can help them or not, you've provided a service by referring them into the program. Obviously, neighborhood stabilization is a huge thing for all of us. We've all seen neighborhoods that have foreclosures spring up, and then property values begin to deteriorate in those neighborhoods. Property condition becomes an issue. That affects all of us, whether we're in the real estate business or not, but has a particular impact on you folks. So again, if we can keep these people out of foreclosure and keep them in their homes, then those issues don't apply. We don't get the abandoned houses. And then obviously the last one is the short sale with the transition assistance. I know most of you are aware that there is the HAFA program that came through Treasury that a lot of servicers do participate in, that provides that borrower an incentive on certain transactions to do a short sale. Our program is kind of a gap filler that goes along with HAFA. There's a lot of transactions out there that are not HAFA eligible for a variety of reasons. So our program is designed to help those folks who would be HAFA eligible provided their loan was, and they find themselves in circumstances where they're not able to get the HAFA money. Customer activity, just to give everybody an idea of where we are with the program. We rolled the program out January 20th of this year. We did a very small pilot for that just to test our systems and make sure everything was working appropriately. But we really didn't roll out the program until mid-January, so we've been out for about 90 days now. As of April 27th, we had a little over 3,100 customers who had created accounts on our system, and were in the process, hopefully, of requesting the assistance. That number since then is up close to 4,000. We've really seen an influx in the last few weeks. As of late April, we had 100 folks who were either had received assistance and were now back on their own because they had solved their issue, or were still receiving assistance. that number's almost doubled in the few weeks since the end of April, and it actually will grow very, very quickly over the next several weeks. We've started some outreach measures. We didn't do many on the front end because we wanted to see how the program went. But we're now doing direct mail to folks who are receiving unemployment benefits in South Carolina to make them aware of the program. In the coming weeks, you're going to see hear radio advertising, see billboards, print, web advertising. We're really going to make a big push to get the word out and let folks know who may be eligible, how to apply, and some basics about the program. Internally, we went through a lot of challenges to get ready for this. This was not a program that we've run before. We fully staffed the SC Help program. We have all the underwriters in place, and all my operations folks are there, so things are running as well as they're going to. We now have over 23 approved housing counseling agencies, soon to be 26. The number of servicers participating was 30 just a few weeks ago. When I checked this morning, we were a little over 40, and that number grows every day. And our Counselor Direct system, which is a system that we've leased to do the customer intake, is fully operational. And it takes the customer all the way from creating that initial account to my underwriters approving the deal on the back end, and the finance division making the payments to the servicer. So it's truly an integrated system for us and works exceptionally well. And that's really just a quick overview of the program. I didn't want to go into a lot of detail today because the program does change. One of the main things that I always want folks to understand is not to self-exclude, that if they think they may need help, they think they may be eligible, to go ahead and apply, because we've already made adjustments to the underwriting guidelines based on the customer feedback we've seen. And honestly, I do expect us to go through a couple more rounds of changes to our guidelines to make sure we're capturing as many customers as we realistically can within the limitations that we've been given. If you're talking to folks in the field and they think they may need help, the quickest way for them to get assistance is through our website. And again, that's scmortgagehelp.com. They can go right there, see a list of counselors. They can create their account and get started. If you have folks who don't have internet access or aren't comfortable starting things that way, we also have a toll-free number, which is 855-HELP-for-SC. And what will happen there is one of our call center operators will assist them in getting their account set up on the system, and then we'll immediately refer them to a counselor who will then get them on the phone and complete the rest of the transaction that way. And just as a quick look, I want to just give you a brief picture of what the website looks like. It's very simple. We don't make this complicated. Most folks can get through the majority of the application without having any notes or other information in front of them. It's just a matter of filling in the blanks and answering the questions. One thing that I do want to mention that's completely unrelated, but I do think is another thing that's important to you guys if you hadn't already heard yet, is on the other side of our house at work, we have the Mortgage Revenue Bond Program, which is our first-time home buyers program. We're very pleased to announce we just recently rolled out the 2011 Palmetto Heroes program. For those of you who haven't heard of the Heroes program before or in years past, it applies to police officers, firefighters and EMS, teachers, nurses, and veterans. Veterans were added this year. Has a fixed interest rate for 30 years of 4 5/8 and down payment assistance of up to $5,000, which in some cases includes an additional $500 that comes through the Realtors Association, a grant that you folks gave us a year or so ago. So for those of you actively working with buyers, if they're first-time home buyers fall in one of those categories, we encourage you to ask your lender about the Palmetto Heroes program, or you can go to the authority website, which is schousing.com, for more information. And I believe we have a few minutes for questions. So
We have Alan Donald, who asked, do you provide assistance to military?
right now, there is no provision for direct military allocation, or excuse me, relocations. Now, if a military person is relocating due to a short sale or due to a deed in lieu, then we may be able to help. But if it's a strict, based on military orders change relocation, then the terms of the program as prescribed by Treasury would not allow us to offer that assistance.
Will the lender report to the credit
Great question, and I'm actually going to expand my answer a little bit. If the customer's on the monthly payment assistance program, and let's say they come into us and they're 90 days down, we'll help them out through the term of that program, but they have in essence what's called a 90-day rolling delinquency, because we're making a current payment, we're not making all those back payments on the front end until they become reemployed. So although we're making that ongoing payment, they roll along at 90 days down. And yes, the lender will continue to report that. There's been a lot of debate over that. At the end of the day, the decision was this program is designed to keep people in the houses, not necessarily to protect their credit. And therefore the decision was made that although it will have an impact on credit, it's better than not making that payment. Direct loan assistance will have really no impact on the credit, because it brings the customer current. And then if they do indeed negotiate a short sale with their servicer, regardless of whether or not we participate with transition assistance, the servicer will report that short sale just as they would on any other short sale.
Robert Dobbs asked, how long do these programs?
Theoretically, the programs are good through the end of 2017. Realistically, they're good until the money's gone. And $295 million is a lot of money. We expect things to escalate very quickly over the next several months. So our best guess is that the money will last about 3.5 years before the program runs its course. But again, when the money runs out or we hit the end of 2017, whichever comes first.
Do you define divorce as a self-inflicted condition or
having been through one, I can define it as self-inflicted, but realistically, for purposes of this program, it is considered a hardship. We've had a lot of transactions come through that were divorce related, where the spouse that was keeping the house, was facing a delinquency because they had issues getting that mortgage payment paid during the time the divorce was being finalized. So yes, those folks potentially would be eligible.
Jim Rowe, who's asking, what about self-employed whose business?
I knew this one would come, and ironically, we're working very hard right now on two new components of the monthly payment assistance program. One for underemployed folks who may have had a W-2 job. They had a job where they were being paid by someone else and lost that job and are now earning less on a new job, or had their hours cut and are earning less. So we're designing a program to help them. We're also designing a program that does exactly what this question describes for folks that are self-employed, who due to general economic conditions have seen a substantial drop in income, to be able to step in and help them as well. Can't share any details yet, simply because I have a proposal on my desk, but we have not gone through the approval process with Treasury. And realistically, we expect that'll take a few weeks at best, but as soon as that's available, you'll see it on the website. All right.
Someone who lost their job, went through bankruptcy, that is now caught up but cannot afford.
Potentially, yes. The couple of tests we do, if their bankruptcy has not yet been dismissed, they haven't completed the bankruptcy, then we can't help them until that's done, because it's incredibly difficult for us to create a new security instrument against a property when they're in an active bankruptcy. So once that bankruptcy is completed and that particular issue has been resolved, then we're able to work with them again. If they lost their job before, during, after the bankruptcy and now are unable to afford the payment going forward, even if they're current, yes, we can help them. In fact, we have a lot of customers that have heard about the program, and when they apply, they're not a day behind. They're 100% current on their mortgage, but they're exhausting 401ks, children's college savings, whatever they have to do to stay in that home. So we're able to step in, begin making that payment for them, and they never become delinquent, which is the ideal situation. So the answer to that one is yes.
presentation. Thanks.
Thank you, Alan.
Mark said, must the homeowner be delinquent to qualify if hardship is on the horizon?
No, and again, it goes back to the earlier answer. We've had a few customers who, their company announced layoffs. They may have been, 2 weeks, 3 weeks, even, 4 or 6 weeks away from that layoff occurring, but, they've already been informed, they're on the list, the company can verify that. We've encouraged those folks, go ahead and get into the system. A known hardship is a hardship. It may not have occurred yet, but if it's coming and we can document that it's coming, we can work with that. And again, you do not have to be delinquent to receive the monthly payment assistance. You just have to meet the hardship requirements as well as other general requirements. But we prefer customers get in before they're delinquent, and hopefully we can keep them from ever getting behind on their mortgage.
Alan Donald again said, do recipients need to be legal residents?
Yes, they do, and I'm not an expert on the different classifications, but that information is available on the website, and you can get more detailed information there, because if I try to answer specifically, I guarantee I'll get it wrong.
Does it usually take before the homeowner will qualify for this program?
Another great question. This program is very customer driven. I'll give you a great example. The day we opened the program for pilot, one of our pilot counseling agencies had a woman walk in off the street who met the criteria, needed help, and didn't even know about the program. She was just looking for help. We had her approved within a matter of 3 or 4 days, and she just happened to be at the right place at the right time. The key was she was very motivated. There is documentation that borrower has to provide, and only the borrower can provide it. And so those borrowers who are motivated and get their paperwork in quickly can get assistance very quickly. Now, to put that in realistic terms, a customer who is very motivated should be able to be completely approved of the program in a matter of 2 to 3 weeks at the most. We have other customers that it takes them 30, 60, 90 days to get approved because they haven't been as motivated. They've dragged their feet getting the information in or brought in the wrong information. So we've actually increased the level of information we make available to customers to tell them what's required, what they need to bring. We've done more training with our counselors to make sure they understand what to tell the customers is critical for submission. So once that request comes in from the counselor to our underwriters, our guaranteed turnaround time is 3 days. So once that customer does everything they're supposed to do, they're going to get an answer within 3 days or less. So we've been beating that 3-day number pretty consistently, but as volume picks up, I'm sure we'll start bumping into it. Looks like we have no other questions. I just want to thank you folks again for the opportunity, and if you have any questions, first line of defense for this program is please visit our website, which again is scmortgagehelp.com. And thanks again.